We welcome back to Morning Live Travis Cairns, a certified financial planner and professional insurance agent with Desjardins Insurance, joining us today for some fact or fiction surrounding life insurance. Good morning. Are you ready?
I'm ready, Bob. How are you today?
Good, good. How are you doing?
Excellent.
Good. Okay, we'll start off with term life insurance. I can continually renew it as the term ends and always have coverage?
We're going to go with a little
Fact or fiction?
fiction,
Okay.
on that one, Bob.
Uh-huh.
You can renew your term insurance, but every company will have a defined date and defined age where you can no longer do so. So you'd be kind of putting off the inevitable renew, pushing it off, renew, pushing it off, and then at 75 or 80 years old, you won't have coverage at the time when unfortunately that event is most likely to happen. And even before that, many people will stop renewing just because it becomes so cost prohibitive. As you imagine, the price rises as you get older.
Right.
You're 65, 70 years old. You go to renew your coverage. It just gets
It's
crazy
through the
expensive.
roof. So what are the options at that point?
Well, we always suggest you really want to look ahead and know how long do you want coverage for? Because the sooner you lock in your price with some permanent coverage, that price will never change and the coverage will always be there.
Yeah, so typically with your clients, when do you recommend that?
Well,
Before
everyone's
it's-
situation is different.
Mhm.
Obviously, when we're younger and we're carrying a lot of mortgage debt or raising children, we need an abundance of coverage, and that is pretty expensive to do with permanent coverage. So there is a place for term. All we want to do is sooner than later have those discussions on, are you going to be okay with no coverage after a certain period? And if that answer is no, then even if we just take a little bit of your coverage and make it permanent and leave a lot of it in term, that's a good long-term financial plan.
Okay, we've covered this partially, but term life insurance, the cheapest form of life coverage?
Well, yes and no. I'm
Yeah.
gonna give it a fiction. I'm gonna give it a
Okay.
fiction. It is the lowest monthly payment, but in the long term, if you look at the net cost, it's actually more expensive because with term life coverage, there's no cash value. It's like renting an apartment. Yes, renting an apartment is cheaper than owning a house, but you rent that apartment for 20 years and you move out, what do you have? No equity. You just paid and paid and paid.
Right.
Whereas
Yeah.
buying a house is more expensive in a monthly payment, but obviously there's equity there,
Right.
as there is with permanent coverage. If you change your mind and cancel your policy down the road, you move out, as we would say,
Yeah.
you're going to get the equity in that policy. When you take that into account, it's actually a better net cost product.
Yeah, definitely something to consider. Okay, fact or fiction, if you have ever suffered a major illness, you can't get life insurance.
Another fiction. Now, it depends, but people obviously assume if I ever had cancer or a heart attack or some major illness, I can never get life coverage. And it's actually not necessarily true. It really depends on what the illness was and how long it's been in remission. We've had many clients get life coverage having had cancer in the past or a heart attack or a small stroke, a TIA. It's not
So what's the
black
difference
and,
in cost with these policies?
well, actually, that's just what I was going to say.
Oh.
It's not a black and white issue with life
Yeah.
insurance because there's a thing called rating, meaning if you're not an outright decline, you could just be rated, which just means you pay more than the average person who is of average health. So it's not necessarily yes or no. It's yes, you just pay a little bit more. And we always advise people just go through the application process, go through the medical underwriting, and let's find out where you're at before we make any decisions.
Okay, is it better to buy term life insurance to protect your mortgage than to buy the mortgage life coverage from a lending institution, for example?
Well, if you ask the lending institution, they're going to say no. But I'm going to say yes. And it's for three main reasons, Bob.
Okay.
Number one is real life insurance does medical underwriting up front. Mortgage life insurance actually does the underwriting after you've already passed away, which opens the doors for a high percentage of decline cases. So the last thing you want is to pay for that coverage for years thinking you're protected, and then when the event comes, you find out, well, or your family finds out, unfortunately, you weren't protected. Number two is the premiums don't rise. If we lock you in for a 20, 30-year term product to get you through your mortgage, that's going to stay that price for that entire term. Mortgage life will go up in those little stairs Every time your mortgage renews and you're 5 years older, you're going to pay a little bit more. Lastly, probably the biggest reason, real life insurance is not directly related to your mortgage. Mortgage life insurance, it's just for your mortgage amount.
Right.
But then what?
Yeah.
Right? Real life,
yeah.
you buy as much as you want. So you
Okay.
can cover the mortgage and then some.
Well, I wish we could cover more, but we'll link up Desjardins Insurance at chch.com. And thanks for your regular input on all things
problem at all.
insurance. Okay,
Have a
thanks so
great
much, Travis Cairns. Great to see you.
Take care.